Here's how you can add a little bit more fine detailed technical analysis to confirming what's this? H minus breakouts, right? Algo breaks from stocks that are breaking out. You know, they get relative strength on that day, they get some volume, they pop through that algo line. Most people just look for, typically they just look for the price intraday to like come back and bounce off it and go. But so many of them just rip without you. You might be wondering what's actually happening to cause that to happen. And it all has to do with like liquidity and retesting levels and making sure that there's support underneath, etc., bid checks, all that type of thing. Here's the simplest way to do it. So something like Meta, on that reversal day of SPY, we have this breakout the next day, which is good. The market is now bullish. The market's on your side. You're looking for longs. And you're looking for strong longs, and Meta is probably the strongest of the Meg 7 overall long term, but this little area down in here isn't necessarily as strong as it looks, and down here you don't really have confirmation of relative strength. If you're just looking for relative strength, your scanner might not show it. Like it might not pop up, which is kind of an issue because you want to get into the move as soon as possible, but so that there's a lot of meat left on the bone, but you don't want to FOMO into the thing. So here's some things you can do to get into this type of move. So step number one, you need to find the algo line or find like where the trend line is that it's breaking. Not every stock is going to look this clean cut where you just see high volume D1 candle here, high volume candle there, bam, just line through there. Anytime you break it, there we go. You're looking for, you know, you might need to find it on a lower time frame. You might need to find it like on the 30-minute or the 5-minute or something like that. You need to look at the price structure to see it break out through you. That's a clear breakout. But, you know, there might be one there. Who knows? The next thing that you're looking for is the break of the opening range high. And the opening range high isn't necessarily just the start of the day. A lot of times stocks, they'll rip right at the start of the day. So that's why we call it the opening range high. But you're really looking for contextually the range high from the point of breakout. So you're specifically looking for where the breakout happened. And where the breakout actually happened is where the balance of volume shifted towards the bullish side from the bearish side long term. So if we just take an anchored volume weighted average price and we just look for the previous trend up, where's the highest point? Because the highest point will show you kind of where the average shareholder is now in profit from this previous trend up. So anybody who got stuck in this pullback, they're now in profit. And so you can see we have a break of this line and we have this point right through here. So this is actually the level, not this, okay? Because you could just get it to there and then reverse it and back down through here. So we'll put a line through there and I'll color it the same color. We'll put it out through there. So that's our point. We're looking for a break of that point. And when you're marking up D1 charts and you're looking for H minus breaks, this is the best way to do it. You have the algo line and then you have the anchored VWAP, the highest point from the previous uptrend. So this is that level right through there. And you'll see intraday like, wow, there's something going on there. And that's definitely the shift of balance between bearish and bullish. You're trying to get in once you have confirmation of a shift to bullish. And then that's when the shorts start like capitulating out. That's when the bulls start having to chase the price to get their fills. That's where you want to get in. That's the start of a trend essentially. But we're not done yet because oftentimes these breakouts will happen from a really extended position. They'll really reach far up high and the foothold of the previous bid check or support is so far down that this whole thing could fail and just totally flush you out. And then we could go for another whole leg down and then you have a more shallow algo line. So the next thing that you can do here is you can take a look at the previous day anchored VWAP. So that's this day. And you're looking for a confirmation above the VWAP of the previous day. Hell, maybe even the day before it. We're not sure about that. But you'll notice that if you're getting a real reversal, they're kind of overlapping. So this line, these levels through here are the volume weighted average price of the previous 2 days. And you'll see that we broke down below them, bearish, and then we broke above them, cool, bullish, but there's no bounce. There's no foothold. There's no bid check. So right now, the current foothold is like way down here. This was the last test of support, which means that if you want to hop into this thing before confirmation, like you get the break, but you're not sure where the bid is, the support is, you got to put your stop all the way down there. You got to have like a $30 stop or something disgusting like that if you really want to trade that correctly. The right thing to do is to wait for the retest of it. bam, right through there. And that's on day 3. So you'll see if we go back to here, day 1, day 2, and then bam, there's day 3, right through there. As soon as we get that bid test, now we have a shift through the algo line over on the bullish side of volume with a foothold right through here. You can now trade this stock as soon as you break this opening range or this range of the break. As soon as you get that high break, you can enter here, you can have your stop here. That is an $11 stop. Or hell, if you're using a leverage one, that's like a $1.50 stop. So now you can enter the trade here. And if you're really bullish on the market, you now have a very tight stop, and you can just ride that bad boy as long as you want. You can take partial profits, you can just get out quick or whatever, but you're way more than like 20, 30% profits. You're looking at 1-to-1 or more. You're looking at maybe 3-to-1, 4-to-1. Who knows, on some of these lower momentum stocks, you're looking at 5 or 6-to-1. This is the breakout strategy that you can use intraday to confirm. So to recap, look for the D1 structure first where things shift bullish. So you're looking for something that previously trended really well, something that's showing maybe a little bit of support, strength, starting to bounce, nice support off these SMAs, etc. You find the algo line. You look for the break of the algo line, but also the highest anchored VWAP from the previous trend. And then from that position, you know it's on. Now you're looking for confirmation of that break. And the confirmation is a foothold and a break of the opening range high of that break. Okay, so you're looking for the range high of that break and a foothold. Sometimes these stocks will move so much that you don't need to worry about the foothold, because you know that by the time they come back, this anchored VWAP has moved up, maybe even past your original entry, or definitely past the low of the day. Those ones you can enter in right away. Some more momentum ones, like maybe something like Atro. Was that one? Or LASE or something like that. So here's Atro, here's another thing. So we're looking for the highest anchored VWAP right through there on that one. You can tell this one's got a big momentum to it. Like it's moving like crazy. So this is the level right through here that we're looking at. You can see that it kind of fights around that area for a little bit. This day, which is right off that Wednesday, or actually you can see how much relative strength it had leading up until that Wednesday bounce, but it's still fighting around there. You wouldn't dive in right through there or through there. You look at the previous day anchored VWAP, that's this day, right through here. So you can see through here that we're getting support off it, right? Before we didn't, right? We were below it a little bit, and then we broke through, tested the high, but we had to come back and get that previous day anchored VWAP. So now you're looking for a break of this, right through there. And then you go into there. But now you need to be kind of wary of some of these horizontal levels. Like that's pretty gnarly. But usually red candles, as soon as you're kind of halfway beat them, you can get enough momentum through to break it. But you can even just put a stop break even there if you want to, right? So essentially the real entry was right here, this candle, 10:15 on Thursday, right through there, the next day. So that's where your entry is. And then your stop can be the low of that day. So let's find that day. Right through here. And the low of that day. Wait, let me turn that green. Yeah, okay. So Thursday at 10:15. That's this one right through here. And then we can use the low of this day or maybe even the low of that. And then we can ride that. So yeah, that's it. That's how you confirm breakouts. Look for the anchored VWAP. Look for the break of the range high from where you broke that D1 chart. Should be good. Fairly high probability.